Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief.
Good morning. Welcome to the morning brief. Today is Thursday, March 16th, and oh my goodness, there is so much to talk about today. 8:30 this morning, we had unemployment claims, which were better than expected. That's bullish. Strong labor market. Philly Fed Index came out at minus 23.1. Terrible number. And if you can look, we had, I think it was yesterday, maybe it wasn't, yesterday we had the Empire State Manufacturing Index, which also was awful. So manufacturing is not doing well at all. Building permits, however, were up. And a pretty substantial amount, 1.3 million versus 1.5 million. Housing starts were up 1.2 million versus the actual of 1.45. Again, these two are extremely bullish. So what is the Fed to do? We've got the Silicon Valley Bank debacle, Credit Suisse issue, yet the manufacturing is going down like they would expect it to do with rising interest rates, but housing's going up in spite of the rising interest rates. So we have some major conundrums going, whether the Fed raises next week or decides not to, 25 basis points versus 50 basis points. And the market has been insane. The volatility is through the roof. If you've been trading the ES, I'm trading a 2-minute chart, and let me tell you, 2-minute charts had one bar, middle of the day, 53 ticks. That's insane, the amount of volatility. Later in the day, we have Europe coming out with a bunch of their rate statement, monetary policy statement, and press conference at 9:45. Natural gas storage, and that's it for today. You think that's enough news for today? Let's go to look at some charts. So chart-wise, we had a relatively benign day yesterday. Big bar. We're looking like we're opening down slightly. It just looks like we're sort of consolidating into either this band or just slightly above this band. You can see that this band here could easily be argued that it could be a little bit higher because of all this action previously. So in the chart's kind of like, whatever, right? It's not really telling us too much. Top side, I think this low, there's a double, we make this bigger. You can see that there's a double low volume node area. Probably this upper side, 39.78 is kind of the top side. Bottom side continues to be really ugly. Back down at these lows right here, which would be 38.84. The previous low from yesterday, which is 38.66. And then Monday's low, ugly, 38.40. So those are some big picture numbers where it could go. It certainly looks like it's skewed and wanting to go down, but at the same time, anytime you have tails, see the candle has a long tail, that candle has a long tail. Anytime you have tails at the bottom, usually that means that a bottom is being put in place, at least an intermediate. And if you look back at the chart, you'll see tails here showing that this was bottoming out. You also have on the top side, it does the same thing. You have big wicks at the top, and that shows that the market is topping out. So this is really kind of bullish. And housing starts, let's just say it, that's very bullish as well. So the Fed is going to either have to fight inflation, raise rates, and threaten the banks, you name it, it's ugly. The Fed's got himself in a mess. Yesterday, inventory was positive by 24,000, big number on a down day. So we had down price action, Nothing but buying. I got to tell you, people, if these buy the dip people get burned just a little bit, it's going to be one ugly sell-off. Tons and tons of people buying the dip, and which is great that they're buying the dip. Is providing a lot of support. But when that runs out and the market burns those people, the selling is going to be absolutely intense. So while it's good that they're buying the bottom here, they're bargain hunting, it's also very, very bad if that strategy doesn't play out. Currently, we're down on the day a little bit, and inventory is very slightly positive. Nothing to really worry too much about. I worried that eventually those buy the bottom people are going to get burned and they're going to bail. And when they bail, it's going to be one ugly, ugly scenario. So intraday, looking at the 7-minute chart here, intraday, where do we have overhead resistance? We have overhead resistance around 39.39. We talked about that number yesterday. 39.47, which is close to the round number of 39.50. And you really kind of 39.70, 39.90 area would also be overhead resistance. Support on the bottom side. We have some support here around 3,900, right? We watched do that yesterday. 39.07 also yesterday. So those two levels, and then you have to go down a little bit farther, 38.77. 38.77. I'd probably go to the next level here at 38.58. So those are your intra-day numbers. So now there was no reaction to the news, but now they're starting to think about it and going, hey, the Fed is really in a quandary here, because if they don't raise rates, it makes it look like they've stopped raising rates, and that inflation they're not fighting inflation because they're giving up inflation for the big banks. It's a really, really a mess. Now, we also have the Stock Traders Almanac, which is actually bullish today at 57.1, which is the same as it was yesterday. 57.1, which is a historical bias to the upside, about 7%. So that is what the overall bias is what it is. As always, keep your powder dry. A lot of people, I've been getting lots of feedback about how volatile the markets are. There are times when it is best to stand aside. When the market's not not helping your system, many times you just need to step aside and say, hey, I don't have to trade today. Cash is a position. That being said, happy trading, and we'll see you tomorrow.